I mean, what do you make of these losses? And, the thing is that some of it is mark-to-market. The thing is, where's it all going wrong for SoftBank?
Well, we're delighted to see those losses because we're short the stock. So this is where we stand. Probably we're the only guys out there telling people to investors to short the name. So we're reasonably happy with the results. But I mean, look, SoftBank's been talking about disciplined approach towards investment ever since the WeWork debacle, a few years ago. We haven't seen any sign of that. And what really kind of concerns us even more now is that despite the capital constraints that the company's up against, they've decided to use 400 billion yen of that cash, probably raised from maybe Alibaba sale or forward contract sale, to buy back shares, which is ludicrous. In this kind of situation, what you really want to do is deleverage, pay off debt, clean up the portfolio as much as you can, and hope for the best that the market will rebound. Because that's at the end of the day, that it very much depends on what the market does, whether it's the IPO market drying up and then maybe restarting at some stage, or even the VC market, showing some signs of life. But I don't see any lessons learned. And the other thing, of course, is that these big cuts that they're going to make into Vision Fund leaves them very stretched in terms of how they're going to manage those investments that have been made thus far, with less and less people. So we're not convinced. I mean, we think it's sorry.
I mean, the thing is that also, there are issues here, market. We've also got, of course, possibility of some, a lot of leverage and also, of course, margin calls here. Are you concerned about that?
Yeah, margin calls is definitely a big concern, particularly on Alibaba's stake. I think they've sold much of their stakes that they can that have not been pledged. But remember that last time, I think it was in March, when Alibaba's share price went below 80 level, there was immediate calls for margin calls that they avoided, luckily. So if Alibaba goes down again, that's one of the big ones where the big stake that they've fairly high leverage on. Some say it's about $30 billion of loans. Obviously, we don't know for sure. But look, right. Sorry, go on.
No, so Amir, I just wanted to pick up on because you mentioned you're short. Just to clarify, you're short in which specific security? I'm guessing it's the group and not so much the telco. And if that is the case, do you have a specific target for that stock then?
No, not really. No, we just think that as long as the current market conditions remain severe. And SoftBank has been a poster child of the excesses of the last couple of years. They're always a poster child of some excess that goes on. Whether it was the tech bubble of late 90s, they were a poster child then. Son just can't help himself. He just likes to get involved in the animal spirits when they get very, very frothy. And they always come in at very high levels. And I thought it was really interesting that they actually sold Uber just before Uber's earnings came out, and Uber's share price is up 15% since then. So they've sold their entire stake right at the bottom of the share price, which obviously doesn't bode well. Whether you're buying at the highs or you're selling at the lows, it once again demonstrates that there's not much method to that madness.
And Amir, to Rish's earlier question, I wanted to follow up on that too. Mark to market, at some point they'll have to produce the cash, and they've been selling some of the forward contracts on, say, Alibaba as an example of their way, I guess, of sort of shoring up liquidity. Do you think SoftBank will find itself in a severe cash crunch situation?
Well, they're selling the most liquid names first. Alibaba is obviously, one of the first ones that you sell. The second one would be SoftBank, the telecom unit, which you mentioned, SoftBank Corporation, which is very easily. It's easy to be able to offload that asset because it's fairly liquid in Japan, and it's a telecom name, which is fairly defensive. So that's another name that they could potentially resort to selling. And if they do sell it, obviously they won't have access to the cash flow, which is an issue for them. But yeah, I mean, look, what is happening is that there's. Sorry, go on.
I was just going to get to pick up on something there as well that you're talking about. As we see interest rates go up, we see the era of cheap money coming to an end. How does this affect the gig economy, which actually SoftBank is heavily invested in? Because they may well find that they are not making money in the future now as they were predicting before.
Yeah, I mean, look, they talk about how diverse they are in terms of the portfolio, but if you actually look at things that they bought like Uber, DoorDash, Grab, Didi, it's the same names. I mean, globally, I don't see that much diversity in the names that they've accumulated. Big stakes. I mean, Coupang, obviously, Alibaba. I mean, so yeah. I mean, if one does believe that the economy is going to slow down. And I think we've seen a bit of a tailwind on some of these names because, the opening of the economies and the post-lockdown has led to, to recovery in earnings. And I think that might actually prove short term. But I think, over the longer term, yeah, you're right. I mean, are these companies, even Uber, are they going to ever, make a profit? And if they do so, when? So obviously they're out of Uber, so it doesn't really make any difference for them.